My name is Renee Wei, and today I introduce you to Menē Inc., a brand new and unique way to invest in gold and e-commerce. Menē is a fast-growing startup that is in 2 years taking the global jewelry market by storm. The New York Times said Menē jewelry is worth its weight in gold, and Vogue magazine said Menē is one of the most successful jewelry brands to have launched in recent times. Today, my goal is to bring Menē to your radar as a stock newly listed on Toronto Stock Exchange Venture under ticker symbol MENE. I'm also trying to introduce you to Menē product, so hopefully you become an investor, a client, as well as a shareholder. To help you understand the concept of Menē, I'd like to start by introducing you to the jewelry market, which is a large addressable market. It's not only one of the most ancient industries in the world, it's also one of the largest. As you know, the global gold market is $8 trillion in size, and half of that is in jewelry. Every year, $300 billion of jewelry is sold, and increasingly, e-commerce is taking a big part of that sales. Just like any other industry, e-commerce is the majority of the growth, and a research firm estimates that e-commerce sales for jewelry is expected to grow by 17% per year until 2021, at which point the online sales of jewelry will reach $30 billion. However, those numbers disguise two completely different markets, the East and the West. In the East, as you know, consumers are accumulating precious metals in the form of jewelry. Goldman Sachs estimates that around $3 trillion of precious metals is held in the form of jewelry among 2 billion consumers in the East. And people are still buying. There is a rate of 0.5 gram per capita per year, according to Goldman Sachs. There is a huge demand for high carat jewelry, 22 or 24 carat only. There is, it's priced by weight. There is a minimal design fee of 10 to 30%. There is huge demand for unbranded jewelry, branded jewelry, layaways, financing, etc. And it's a very fragmented market. Some of the biggest names are at the bottom of the screen, and the top 10 players only take 7% of the entire Eastern jewelry market. The jewelry market in the West is very similar to the discretionary market. There is the weight of the jewelry is never disclosed, and 22K or 24K carat jewelry is not offered by any of the leading players. There has been a systematic dilution of precious metals content in the Western jewelry world, and if you go to the next slide as well, you will see it's an extremely consolidated market. The top two players, Tiffany's and Pandora, they sold $8 billion of jewelry last year alone, and the market rewarded both companies $20 billion of combined value. And Tiffany, of course, is being sold to LVMH at a valuation of $16 billion. For the last few decades, we have seen industries or well-established players being shaken to its core when newcomers emerge and capture the imagination of consumers and introduce a paradigm shift to the entire industry. Companies such as Amazon and Uber completely changed the way consumers buy books and call a taxi. The jewelry industry, however, is bigger than the industries of taxis and books combined. However, this is one of the industries that has been very stagnant, has not seen any meaningful disruption since the age of the internet until now. Menē is introducing a brand new business concept that is completely changing the way that jewelry is prized, made, sold, and even thought of. So how? We have introduced 3 key pillars that is very important to our business model. So number one, Menē is the first jewelry brand that only sells 24 karat or pure platinum jewelry without any gems or alloys or anything that will obfuscate the true weighted value of the precious metals within the jewelry pieces. Number two, Menē is the only jewelry company that prices its jewelry by gram weight and also transparently disclosing our profit margins. So our customers always know exactly which part of the price tag goes into MENE fee earned by us and which part of the price tag becomes an investment in precious metals. And number three, Menē always keeps a profit margin at roughly 20%. So the majority of the price tag would become an investment in the precious metals itself. itself. So a gold ring like this, that is $500, and $400 of the price would be in gold value, and $100 would be the fee earned by us. More importantly, just like a share of stock, real estate, or artwork, MENE will always have objective value that is tied to its weight that can be easily calculated at any time, and that value can stand the test of time and can even appreciate over time with precious metal prices. Some of the KPIs we can share so far: we just finished our second year of operations. We have already sold more than $23 million of sales, entirely achieved by online sales. We do not even have one brick and mortar store. We sold more than 40,000 units to clients to more than 60 countries, and more on that a little bit later. So without proper education, a lot of the consumers are not aware that what they're paying for when it comes to jewelry. Typically, 80 to 90% of the price tag offered by some of the biggest brands in the Western jewelry world goes into marketing and branding, but MENE is flipping that value proposition. So 80% or more of the original purchase price is preserved in the form of precious metals, while 10 to 20% is a fee earned by MENE. So more importantly, we are also incorporating the technology and the power of the internet to price our jewelry in real time. I encourage all of you to go to Menē.com, MENE.com, and you can see how we do that exactly. So we disclose the weight of each jewelry and the gold value tied to it, which is tied to the live spot gold price, as well as the MENE fee. And if you go to the next slide, you will see that there's a portion called My Collection that shows, it's very similar to your stock portfolio, that shows exactly how much return you have made on a piece of jewelry. And MENE has a lifetime buyback policy, so you can always sell your jewelry back to us. We charge a 10% fee. So the pure element of gold and platinum has been coveted for thousands of years. A lot of people have asked me, is 24K gold too soft? And I believe that is a myth created similar to diamonds are a girl's best friend, that it's a metal, it is malleable, but it's indestructible. And remember, in the East, $100 billion of high carat gold is sold every year. So I welcome any of you to stop by and try on the ring that I have, or try to bend it. It's impossible. Another important part of MENE's identity is one of our co-founders is Diana Picasso. She is the granddaughter of the great artist Pablo Picasso, and she brings in this Western DNA and a Western identity to MENE brand, which also has an Eastern value proposition. So that has been resonating and really working well in terms of attracting some of the millennial customers. We own our manufacturing facility. In fact, it's a very vertically integrated business model. I'm based in Toronto. That is where our administrative and operating headquarters is. We have our own manufacturing facility in New Jersey, and our design marketing team is based in Paris, where Diana Picasso is based at. Another important relationship with for MENE is with Gold Money, which is the world's largest custodian for precious metals. Gold Money owns 36% of MENE, and Gold Money CEO is the other co-founder of MENE as well. So this relationships give MENE access to precious metals as well as capital. And another long-term differentiator is the fact that we only deal with 24K gold, so we never have to worry about the inventory losing value. Basically, we have inventory that is an investment in precious metals, and we never have to have a sale trying to purge some of the products that is not welcome anymore. MENE is a very new company, went public on the Toronto Stock Exchange Venture in November last year. If you go to the next slide, you will see we are fully financed, and we have a dual class share structure. So we achieved $3.4 million in the most recent quarter, and that's a Q3, not the biggest quarter that typically for a retailer. We have increased our gross margin to 31%. That is due to expansion in inventory, and when gold prices go up, it helps with our gross margin as well. So that's pretty much it. If you go to the next slide, I believe we have some of the media mentions at New York Times and Vogue. It's a very new company that is gaining momentum very quickly. If you have any questions, please see me at the booth. I will be at the exit for a little bit longer. Thank you very much.